Everybody, please be seated. We're going to start.
All right, good evening, everyone. My name is Anibal Ramos Jr. I have the honor of serving as a councilman representing this beautiful ward. And I want to welcome you to one of the premier elementary schools in our city, First Avenue School. I know it's supposed to be the first day of summer, but it feels like winter in here, so we do apologize for the overly aggressive air conditioning. But it's really my honor to welcome you all and thank one of our sister organizations here in the city of Newark, Invest Newark, for organizing this very, very important forum. Let's give them a big round of applause. To Martha, to Marcus, Gregory, and all those who were involved in putting this seminar together. I believe this is the second one that you've hosted here in the city, and this topic is very important, and for me, it's dear to heart to me. So 7 years ago, I purchased the home that I'm currently in. I was very fortunate to have a number of individuals who are very close to me, from family members and friends, who helped me during the whole process. You know, from obtaining the financing, you know, getting information about different options that I had related to financing. The house that I purchased, I actually saw 5 years earlier than when I purchased it. I couldn't afford it. And the couple who owned the house that I finally was able to buy decided to retire and relocate to Florida. And my sister, who's a realtor, reached out to me, and she asked me if I was still interested in the property. And even with all the help that I had during that endeavor, there were still steps that I feel that I missed. You know, one of the quick stories I will tell you is that, you know, I purchased the house, I closed, maybe 8 months later, contractor recognizes an issue that should have came up during the home inspection. And because I was inexperienced at the time that I purchased the house, it was a very, very important detail that I missed. And that detail ended up costing me, you know, considerable amount of money after I moved into the house. So that's just one small example of how prepared you have to be as a first-time home buyer. And today's market is different. We know the inventory is low. Interest rates are almost at record highs, at least during my lifetime. And those two things create many challenges for you that did not exist for people like me when I purchased my home 7 years ago. And that's why it's so important to have forums like the forum that you have here today. That's why it's so important to have organizations like Invest Newark pull together people like the individuals that are part of this panel, many of whom I know personally, who can provide you some very, very, very valuable insight and more importantly, assistance if you need so along the way. So I just want to say thank you to each and every one of you for coming out here tonight. Keep connected with these folks. They do great work within our city. And more importantly, I wish you all the very best of luck as you make the most important purchase that you're ever going to make in your life. And I just want to recognize one of our school board members who's here, Mr. Daniel Gonzalez. Daniel, thank you so much. Daniel helped us secure the building. And if you catch a cold because it's too chilly in here, you could send him the medical bill, okay? Thank you so much, everybody. Who do you want me to bring up, Martha? And our CEO, I'm just a councilman, but this guy is the president and CEO of Invest Newark. Let's give it up for Mr. Marcus Randolph.
All right, good evening, everyone. Thank you so much for coming out tonight. It's really a privilege for us to be able to have this and to move this around the city. I'm calling it the second installment of this, look at Martha's face, this mortgage workshop series that we're going to be having. First of all, I want to thank Councilman Ramos for being here. I want to thank Councilman Gonzalez as well for being here. But I sort of echo Councilman Ramos' sentiments. I think everybody goes through the process where when you buy your first home, particularly if you are like many of us who did not grow up in a home that the family owned or don't have sort of that that guidance, or somebody who's sort of like, oh, I know how this works, right? So it's a bit, fearful. You enter with a little bit of trepidation, and we miss some things along the way. We miss some things afterwards. A lot of things that we don't know, but nonetheless, you do have to sort of get into it. And myself, I did not grow up with a family that owned our house. So when I made the move to, try to do that, thankfully I had some guidance, but absolutely there were some things I didn't know, some things I didn't have. My funny story is, after I bought my first house, I was like, wait a minute, I got to cut my own grass. I don't have a lawnmower. So what I do, I took a whole bunch of leaves, I raked them to the front, and I said, I'll just rake the leaves to the front, killed all the grass, right? Because I didn't know. So these things you figure out along the way. Um, so Invest Newark is the economic development corporation for the city. We have the privilege of managing the land bank on behalf of the city. A couple of things that we do, we are involved in making sure that Newarkers have affordable broadband. You may have seen some advertisements about ACP. That's a federal program, but it does allow folks to get reduced to maybe free broadband. We're very, very focused on business retention and attraction, so that we can keep and bring in good paying jobs for Newark residents. And of course, we're part of this very important initiative for the mayor to increase the rate of home ownership in this great city. So certainly glad to be playing a part in all of that. I think we are on the cusp of creating the 10th homeowner via the land bank. So I want to give a shout out to the entire land bank and real estate team for that. And that's been in just a couple of years. And there are dozens of properties that we are helping to clean up. Some are small properties that are just going to the person who lives next door. Some are slated for development, but we're getting some of these blighted properties cleaned up in various neighborhoods around the city. I do want to thank two people in particular for making this event possible tonight. Of course, Martha Baez, who was just tireless in her work. So thank you, Martha. And though she's not here, but I want to thank Norma Gonzalez as well for doing a lot of the legwork to make sure that we are in this beautiful school tonight. So thanks again for coming, and it's going to be a great panel. I hope that you enjoy.
Thank you, Marcus. Thanks everybody for coming tonight. And before we start with the panel, I wanted to maybe get on the side so that you could see the screen if you can, to give you a little overview about what the land bank is. Some of you might know, some others might not know. And when you hear the word bank, you might think we're a financial institution, because I get that a lot. So you lend money, can I get a mortgage? That's not what we do. So a land bank is a public entity that specializes in the conversion of vacant, abandoned, blighted property and putting it into good use. So we can say that we are vacant, steward of vacant property. So we maintain properties, we put vacant lots into reuse. We help with job creation. We help with foreclosure prevention. Also development, so rehabilitation, new construction, and affordable housing. And some of the problems that land banks help to address is large numbers of vacant and abandoned properties, dilapidated properties around a city or a state, fragmented inventories, properties with little market value, restrictive public property disposition requirements. So it's easier to dispose of properties via a land bank than via a municipality. So the Newark Land Bank was launched in 2021, but before that, in 2019, the state of New Jersey passed the first land bank law to allow cities throughout the state of New Jersey to form land banks. Then in the same year, the Newark Municipal Council approved an ordinance to establish the Newark Land Bank. In 2020, the Municipal Council designated Invest Newark as the entity to hold the Newark Land Bank. And the same year in 2020, the municipal council authorized a trust agreement to transfer the first set of properties to the land bank. The land bank finally launched on March 1st of 2021. So here we are today. Some of the priorities of the land bank, first of all, is to boost homeownership. Many of you know that the city, most of the people residing in the city of Newark are renters. Only 25% of the residents of the city are homeowners. So one of our priorities is to increase that number. We also prioritize reducing blight, creating affordable and market rate housing, increasing capacity for minority women developers, expanding neighborhood business opportunities, increasing property values. That's very important because once we create a new home, rehabilitate a property, clean up a vacant lot, that have a trickle effect in the whole neighborhood and increases property values. We support community goals, and most of all, we improve the quality of life of Newark residents. The opportunities that we have in the land bank, first, the equitable homeownership opportunities. The Section 8 program, some of you might have heard of the Section 8 program, which is the most famous programs that we have in the land bank. So people that hold a Section 8 voucher can convert the voucher from a renter to a mortgage voucher and then be able to purchase a home from the land bank. We work with the Newark Housing Authority that qualifies the voucher holders to be able to convert their vouchers. And then NACA, who's here today, also is our partner in this endeavor, and they help people get qualified for the mortgages. The Moving Ready program, this program allows people to purchase a home that is already renovated and ready to occupy. The homes are renovated by local minority developers, and they are offered to first-time home buyers. We also have the Pro Newark program, which allows qualified buyers that wish to purchase their first home to renovate. So they can come to us, select a property that they wish to renovate themselves, and once they renovate the property, they can occupy it and they have to stay in the property. For the Pro Newark and also the Resident Advantage, which is similar to the Pro Newark, but the only difference is that the Resident Advantage program has a selected number of properties that are just for Newark residents. So they have to be first-time home buyers, be able to renovate the property to live in it. We also have a side lot initiative, so small vacant pieces of land that are not suitable for development. We offer them to adjacent owners, and they can purchase it to add it to their home, build, a garage, do a garden, or just expand their footprint of their land already. Other opportunities in the land bank, we sometimes have requests for proposals. That's for bigger projects, and we ask developers to submit proposals for larger development. We do economic development, large-scale development through our commercial, industrial, mixed-use purposes, neighborhood business expansions, and nonprofit community partnership. So if a nonprofit that wishes that is already working in the city and working towards expanding the city's goals is able to work with us to get a property. If you have not registered on our website, please do so by visiting landbank.investnewark.org. Register on the top. There's information outside. Once we finish, you can come out to the tables, get more information on the land bank, and then also network with the different financial institutions here and ask questions about the programs that will be discussed here tonight. And if you have any questions for us, you can email us at nlbinfo@investnewark.org. So now we're gonna get it to Councilman Gonzalez is gonna start the panel.
Thank you, Martha. Everyone's understand English. Everyone. Okay. My name is Carlos Gonzalez. I am a member of the board of Invest Newark, and I'm here today as a member of the board of Invest Newark. I happen to be a councilman at large of the city of Newark, but tonight we are here to promote the programs of Invest Newark. And we have with us a group of very qualified bankers that are going to let you know what they can offer so that you can buy a property in the city of Newark and become one of the owners. We have like 75% to 78% of the people in the city of Newark are renters, as indicated before. So we want to make sure the city of Newark, the council, the mayor, and Invest Newark want to increase the number of people that are homeowners in the city of Newark. Once you are the owner, you put a lot of emphasis and a lot of effort in keeping that property in good shape because that's your equity. That's something that you're going to transfer to your heirs when you pass. Or if you live in the city for a number of years in that property, you can sell it and recover your equity in that property. I believe some of the programs require that you be, let's say, an owner and live in the property for a number of years. And I believe that that motivates you to keep that property in good shape. We are going to start. We submitted some questions to the experts that we have here that they are going to address in terms of, let's say, what the bank philosophy is, what they are going to do in terms of rates, what credit score you need to qualify for a mortgage, and what assistance they can give you in terms of, let's say, closing costs, allowances, or credits so that people can qualify to buy a house. I happen to be an attorney and I was a real estate attorney for a number of years. The first step is to get a pre-qualification from one of the individuals here so that when you go to buy a house, you are qualified to buy a house and there is no question that you would be qualified to buy that house because otherwise the people that are pre-qualified are going to be ahead of you in the process because people want to sell the house to somebody that is qualified. They don't want to waste time, let's say, waiting for you to get qualified for a mortgage. And what kind of income requirements, let's say, they have to grant you a mortgage. We're going to start, and we're going to start in the order that we're seated, coming from my left to the right.
Hi, my name is Paul Matias. My NMLS number is 223158. I've been doing mortgage for a little over 17 years now. I'm with Columbia for a little less than a year. Prior to that, I've been doing CRA loans and helping the community for at least 6 years. I love what I do. I do work for a community bank. I try to help as many people as I can, especially achieving their goals and achieving their first-time home buying. That's what my goal is. It's to help everyone achieve their goals and getting to have their first-time home buying. Oh, I go back. Okay, so who do I go?
Let each one introduce themselves and then we come back to the meat.
Sorry. Good evening, everyone. My name is Herbie Emanuel. I work for NACA, which is a first-time homebuyers program. I've been there for 12 years now, and our program helps individuals achieve their goals of becoming a homeowner. What we do is we counsel each individual into home ownership and to help them achieve their goal of obtaining an affordable mortgage loan.
Hello, everyone. My name is Frank Martins. I'm with American Fidelity Mortgage. I've been doing mortgages for approximately 25 plus years. I'm in Newark for a small amount of time, 53 years. My office is still in Newark. I understand the inner city. All I've ever done was build homes. I do mortgages as that's the reason why I'm up here today. But my experience that I like to share with everybody is I try to help you make money. And I try to get money to work for you instead of you working for money. Every day we go to work because we need money. But you got to get to a point in your life where it's going to be reversed. We're going to have the money work for you. I do hold classes for realtors and also clients. And we go over different types of programs and which we're going to be covering very soon. So basically, I'm in the city of Newark for 53 years. I'm in this business for 25. We are licensed in all 50 states. If there's anything I can help you with, feel free to call me anytime.
Hello, everyone. Thank you for coming today. My name is Lisette Morales. I am here representing TD Bank right in the Newark Mulberry office. I've been in banking for over 15 years. I've helped hundreds of family with their first-time home buying process. I am not a mortgage loan originator. However, I'm a liaison. And I can tell you that I grew up in Newark. I grew up in the South Ward of Newark. I am a homeowner in the North Ward, and I work in the Central Ward. So I can tell you there's just so many opportunities that TD Bank has to offer to be able to help you achieve your goals, whether it's financially with wealth or even your first-time home buyers, which is why we're here. I'm excited that an organization like Invest Newark is putting something like this together, because what happens, it allows people like us to be able to sit in front of you and let you know what we have to offer and what the opportunities are for you. So thank you for having us. And I'm looking forward to hearing about some of the programs everyone else has so I can compare what I have.
Thank you, Councilman. I am Sophie Cordero with Valley Bank. I am the community mortgage officer. I've been with Valley for 5 years, but how I ended up in banking is because of my nonprofit background. I have about 20 years nonprofit working with first-time home buyers, doing credit repair, foreclosure prevention. I am proud to say that I worked for 9 years under Ray Ocasio for La Casa de Don Pedro. I don't live in Newark, but I live right across the bridge. I crossed the bridge, I'm here. I was down in Ferry Street today. I've been to the restaurant Latin Flavor, so I invest in Newark. I am a graduate of Leadership Newark, which is a 2-year program that shows you the history of Newark. And if you want to be in the public sector, nonprofit sector, it's a great program. So I am here to talk about my mortgage, but I'll talk about that later.
Good evening. I'm Michelle Darmanin with Bond Street Mortgage, and I just got a little starstruck because I think one of the best salsa dancers on the planet is sitting right over there. Hi. Yes, so Bond Street Mortgage, we're located in Paramus, New Jersey, and in Red Bank. We're licensed in 16 states. I'm a Cuban American. I'm bilingual. And the reason I got into the mortgage industry is because I recognize that, one of the largest communities in our beautiful country is the Spanish-speaking community, and a lot of us don't have the resources available to us to learn how to get to that next step in achieving the American dream. I'm very passionate about offering a highly consultative service to my clients. I'm a team of 7, where 90% of us are women. Very proud of that as well. Not a lot of women. I'm happy to see a lot of women here tonight because there aren't normally a lot of women in the mortgage banking world. So I commend all of you for taking the first step, which is getting educated, getting to better understand what you need to do to get to the next step in home ownership. And I'm also excited to hear what everybody else is going to talk about tonight.
Hi, good evening, everybody. My name is Robert Ballin. I am a community lending officer with Citibank. I've been originating loans for a little over 15 years. So I started really young, fresh out of college back in 2008. Time definitely flies. But as a community lending officer, what I want to remind people is that, the buying a home is more than transactional. It's a process that takes, many weeks, oftentimes months. And I like to make myself available to my clients as a resource to kind of guide you along the way throughout that journey. Home ownership is definitely something that's very near and dear to me. Being a first generation American, my parents immigrated here from the Caribbean, so they didn't have the opportunity to purchase, but they definitely laid the groundwork to ensure the importance of home ownership and something that can be passed on, far beyond when you're gone to your kids and your great grandchildren as well. Working with Citibank, I can tell you that, we're committed to both sustainable and affordable home ownership. And what I mean by that is, getting a home is the first step, but we also want to ensure that you keep the home that you purchased for many years to come. A mortgage is a 30-year commitment. So long after the banking process and the financing, the realtor, the lenders, we're all out of the picture. So it's just you and that mortgage for 30 years. So we want to provide you with a solid foundation regarding what it takes to be a homeowner. Because again, it's not just about the mortgage piece, it's about maintaining the home, understanding how taxes work and why your mortgage payments may increase. So along with being a resource to you guys, we offer a plethora of programs that we're going to talk about later today to not only meet the sustainability aspect of our philosophy, but also the affordability aspect. Because, as someone mentioned earlier, the interest rates have gone up, property values have certainly gone up, and there are programs that are available out there to help alleviate some of those concerns. I won't say it'll solve it, but it'll definitely alleviate it just a little bit to make owning that home a little bit more affordable. Thank you.
Good evening, everybody. I'm Carmen Rosario. I work for the city of Newark for 30 years. Doing Live Newark closing cost program for first-time home buyer. I've been doing it for 20 years. That program is up to $10,000 for closing costs. You must reside the home for 5 years. After the 5 years, it will be canceled, discharged, so you don't have to pay anything. It's 20% every year deduct from the loan. So after the 5 years, it will be discharged. I speak Spanish for the Spanish people. We have other loans, but this one is the one for you to take advantage of the $10,000 that you don't have to pay back if you stay in the home for the 5 years. So I'm here to answer any question about the program. And anything that you need to ask in Spanish or English, we have a table. I have flyers and applications so you can see. This program is by income, so you have to qualify. It's income limit. So everything is on the application or the income. And if you have any question, you can just ask.
That program is an incentive that allows you to buy the house and stay in the house. Let's say if you stay 5 years, that mortgage is discharged. So it's a gift from the city of Newark to those that stay in the property for 5 years or more. After 5 years, you don't have to pay a penny back to the city. So if you have, let's say, the income, if you qualify based on your income, that's something that Carmen have been working on, and I know because some of the people that I did the closings for qualify for those monies. It was 5,000 at one point in time, and $5,000 it doesn't cover that much. these days, based on the, say, the points that you have to pay. Some banks charge you points, others don't charge you points, but $10,000 gift. So take advantage of that if you qualify. Now we're going to go to the meat of the program where everyone is going to explain to us what their programs are to afford you the opportunity to buy a property, what, let's say, what income qualifications they have, what assistance they can give you in terms of closing costs, what credit score you have to qualify for a mortgage, what type of mortgage that you can qualify for, let's say, and before it was, a lot of people went into variable rate mortgages. These days, some banks are offering variable rate mortgages, but most banks are offering 30-year fixed interest rates. So let's start in the same order that we started and have them answer the questions that we have posed to them.
The term of the mortgage right now for CRA loans, it's a 30-year fixed. Okay, we require 620 credit score. There's no PMI, and PMI stands for Premium Mortgage Insurance.
The PMI is, some banks require you to pay a premium because you're giving, let's say, less than 20% down payment on the property. So they want you to make to pay some money so that somebody is going to guarantee that you are paying the mortgage. In this case, they are not requiring the PMI or prime mortgage interest.
Yes, we do offer grants. We have grants to offer. Columbia right now has a $5,000 grant of their own, and we also work with the home federal loan of $10,000. The property needs to be on the low to moderate income track area, and we also look at the income to see if our borrowers do qualify for both of the grants. And we also work with the grant of the city. Those were the three questions, right? Date, duration of the loan, and
You accept gifts?
yes, we do. No. Yes, we do accept gifts from a family member.
Say if you have,
Uh-huh.
if you have a family member that can help you with the, say, with a gift, they accept that. Some banks do not accept, or some banks are very strict as to who can give you money. But it's important that if you have a family member that has that money available, that they can give it to you so that you can afford a house.
When it comes to mortgage terms, okay, if you're buying a single family home, condo, or townhouse, we're going to require 3% down. Can you get a gift? Yes, you can. You could get a gift from a family member, okay? We also use the grants. Right now, if the property is located in the low to moderate income track, the rate is actually low. We are at 4% interest rate if the property does qualify in the low to moderate income track area. When it comes to banking fees, there's no application fee, there's no processing fee, there's no underwriting fee, there's no appraisal fee, there's no credit report fee. What you're going to encounter at the closing cost is you're going to encounter your attorney fees, your title, your recording fees, your tax search, and your property taxes and homeowners insurance. Okay. Thank you. You're welcome.
Thank you. So again, my name is Hervey Emmanuel. I'm with NACA, and we are a nonprofit HUD certified counseling agency. So we're going to counsel you guys into home ownership. The program does have, the program is very unique, where you can put no money down, pay no closing cost, have no PMI, and we don't have a credit score requirement. So if someone has a 500 credit score or someone has an 800 credit score, both of those people will get the same rate. We qualify you based off it's character-based lending. So someone might have had credit cards back in college where it brought their score down. We're looking at the last 12 to 24 months of your payment history to see if you've actually been making your monthly payments and obligations on time. So whether you have an 800 credit score or if you have a 400 credit score, you can still be able to get qualified through NACA. We have a 30-year term, a 15-year term, a 20-year term. If you have a Section 8 voucher, you can actually use your Section 8 to help pay the mortgage. What else do we have here? We do allow gifts, so you can actually get a gift from a family member. We do work with grants. Actually, when I purchased my first home through NACA back in 2016, Carmen actually helped me throughout the way. So I was working, I was still saving up money. I actually got a gift from my cousin to help me buy down the interest rate. I used, at that time, it was $5,000 for the grant, where I was able to get my interest rate down to 2.25%. My mortgage payment was about $1,900 for a 3-family house that I purchased in Newark. I lived in the 3rd floor unit and I rented out the 1st and the 2nd unit. I was actually making income and was able to save my monthly paycheck from NACA each month. So that kind of just changed my whole life, where I was able to actually save money for once in my life. And I felt like I was actually being able to move forward. So it is a good opportunity for everyone to come through the program. We're going to counsel you. We're going to keep working with you until you get qualified and until you actually can be able to purchase your home.
All right, I'm just gonna work in order here. The first question, how many loans have I granted in Newark? Well, being that my office is in Newark, I don't have a number, but I'm sure that it's probably been in 25 years of me doing this. I'm the owner of the company. I have loan officers that work for me. I had my company at one time doing over 120 loans out of my office that I have here in Newark per month. So how many loans I've done in Newark? I don't know. I'm an inner city guy all my life. I'd say thousands. So understanding the community, the neighborhood, I'm definitely in on that. What are the loan terms? Well, in reality, you can get a loan term for 5 years, 10 years, 15, 20, 25, 30. It's going to be based on what you feel comfortable. I always tell people, because there's no prepayment penalty on our mortgages. And what that means is that you can pay off the loan. Let's say you have a loan for 5 years and you decide to pay it off. Well, you're not going to get hit with a penalty, because years ago, people used to get hit with these penalties of 3%, 5%. And imagine if you had a home that you owed $500,000 and you got hit for 3% of that, that's $15,000. So you would have to, on top of your payoff, you would lose $15,000. So there's no prepayment penalty. I do tell people, especially if they like to invest in the future and purchase another home, the smaller the payment, you can always send in extra money and prepay down your mortgage. So the smaller the payment, the better it is for you in the future, so that you could turn around and qualify for more. Because most of the loans, he mentioned that it's really not income. Ours are income restricted. We do have ratios. We do guide people with credit and help them through the system. So as far as, and the interest rates, as everybody knows, it's been going up and down. You mentioned 4%. That's a phenomenal rate. You know, if you fit within her guidelines, then you know you should have a conversation with her. But not everything is for everybody. So you know, we're all here. Everybody's got some value to give. I do mortgage classes, rules and regulations. So I'm kind of used to start talking, then you can't shut me up because I can sit here for hours. So I'm going to continue. But, honestly, we have a lot of wonderful people with a lot of knowledge that do know what they're doing. I was listening to the, years of experience, and a lot of them understand the inner city as well, just like I do. So let's see, do you offer grants? Yes, as a matter of fact, one of the grants that I have is, we give you 3.5%. You do not have to pay it back. Some grants, you got to be careful, as you heard before, that they are income restricted. Well, my 3.5% grant, let's say on a $600,000 home, it'll cover your down payment. If you're doing an FHA loan of 3.5%, that's $21,000. And after 3 years, you don't have to pay that money back. So there's advantages with many different types of things. We do have another grant that's 5% for the people that really need extra money, but that is repayable and it gets put into your loan. So one way or the other, we're able to guide you. Sitting up here and listening to other people, we're always learning. And I think that, I know Carmen. I've used her grants in the past. I've helped people go through her. And I tell you what, a lot of times people say, hey, your grant is based on how many people. It's not how many people are on your income taxes. It's actually how many people that live in your home. So don't think that just because it's you and your wife that are on your income taxes, that you don't have maybe your grandmother and your grandfather, and they do count that as the people, correct? So I just wanted to share that. It's none of my doing, but I understand. I try to understand everybody's market. So we do allow grants. And the reason why I said I'm always learning is because I'm going to see if I can commingle my grant with her grant, because if I can commingle the grants, then if I give the down payment and she gives another grant for $10,000, if I can commingle the two of them, you're really buying a home with no money out of pocket. So I have a table out there. You can grab a pamphlet of mine, take it home, and then you can give me a call at a later date. Let's see, gifts are allowed. You can use any amount of gift that you want. We do source it. It does have to be from a family member, but our gift also can be from a long lifetime friend. Okay, so in reality, that's no longer a relative, but if it's a long life friend that we can source, we will allow that gift to happen as well. So it's all choice of words. We would have to sit down and help you through that as well. Credit score. Basically, I try to keep everybody within the 580 credit score or higher. There are programs that we have under 580. I really don't come out and advertise them because they turn to be a little complicated. At times, I'd rather help you fix your credit. I'll guide you. I can do what is called a credit simulator. That's when I go into the credit reporting system itself and I go in there and I make changes on your credit because we have access to doing that. I'm sure other people may as well. So by having the access of going in there, making changes, I can tell you if you do this, this, and this, your credit score is going to go to that. And as we all know, the better the credit score that you have, the better it is for your interest rate. Nowadays, they run your credit to see when you ask for car insurance. So I don't know the ability of driving a car and your credit score have anything to do with each other. But unfortunately, that's where everything is going, is everything's about your credit score. Income requirements. We have what is called a front ratio and a back ratio. And our FHA loans will let us go all the way up to 56.9%. And I say that because majority of the loans at 57%. And that's really, really high. Sometimes you may not qualify with another institution. And because our ratios go so high, that we were able to get you approved. And as far as going back real quick to the grant, something that just ran through my mind, hers is income restricted. Mine is as well, but my income restriction for my 3.5% is $198,000. So that helps a lot of people qualify for a more expensive home. Other grants that don't allow the income to go that high and only allows to 50, 60, 70, or maybe even pushing it 120,000. Sometimes it won't get you the house that you're looking to purchase, right? So what else we got here? When you allow potential renters. Oh, so do we allow the potential renter unit to consider as income? Yes. We can use up to 75% of the rental. So hypothetically, if the rent is $2,000, we're able to use $1,500 and we use that as income to help you qualify for more of a home. So as far as American Fidelity Mortgage, we do loans from zero money down, depending on the situation, depending on the neighborhood. We do, sometimes people have hard money lending that needed. I actually, over here by South 18th Street, we just had a client that bought a house and he'll never get a CO. So he needed what is called hard money. So we actually do that as well. We actually lend him cash. We did put a lien on the property. And when the gentleman's able to sell the home, then we will get our money back. So we do fix and flips. We have a wide range of programs that we can help you and your family. You can always give us a call. I am in Newark. I'm in the Ironbound section. My office has been in Newark for as long as I've been in the business, for a little over 25 years. Thank you very much. I really appreciate it.
Thank you. I need to borrow money from you. All right. You providing for our customers and for the public. These three CRA products, they have a minimum credit score. One of them is 660. That's for the home access mortgage. 620 for the Ready Step, and also 620 for the Home Ready. Funny, right? Ready Step, Home Ready. It's almost like a dance. 1, 2, 3, 4, 5, 6, right, Grisel? Grisel knows all about the dancing, doesn't she? So I can tell you that income, there is an income requirement for the CRA products. The great news is, which is what I tell all my customers, and my colleague here mentioned, is that you do have an opportunity to, one, accept gifts, and two, if you are looking into buying your first home and it having some rental income, you can use that to also help you offset what your income is, okay? We go up to 70%, and on exception basis, we can go up to 75% now. So that's great news. My favorite product, I'm gonna have to be very biased here, is the home access, and let me tell you why. The home access allows the bank to give our customers a lender's credit of 10,000. It used to be 5,000. So now what does that mean? The bank will give you 5,000, and I like to illustrate. And then we'll go to the city of Newark, and we'll go to Calming, and we'll say, hey, can we get my customer qualified for your grant for 10,000? And boom, we help that customer get another 10,000. And what happens? TD Bank is flexible and they allow you to choose how you want to use your lender's credit, right? So if you want to use it as a part of your down payment, if you want to use it a part of your closing costs, because we all know that closing costs can be costly, right? So now we're using those lenders credit, and then we'll get the additional 10,000, and we can also put it towards down payment, right? Sometimes, depending on who your team is, right? Because the first step is saying, let me get a pre-qualification, right? But we don't want to forget, you still have to build a team, that you still need a real estate agent because you need to find a home, and you still need title insurance. You still need your attorney for your closing, right? So what happens if we can help you save money with your team for closing costs, right? Or even down payment as well, you might be able to get some of that lender's credit and put it right back into your pocket. TD Bank allows for you to get the cash up to $2,000. So I think I'm gonna drop the mic there, and you don't need to go to anyone else. Okay? This is it. No, I'm kidding. But for more information, please see me. Yo hablo español también, de la misma manera que lo dije en inglés, te lo puedo decir en español. So, el que tenga cualquier pregunta, podemos dialogar afuera. No hay problema, no tengan miedo. Yo sé que todo el mundo aquí también habla español, ¿ok? Y el que no habla español, que venga donde mí, que yo te lo puedo traducir, ¿ok? Gracias. Ok.
Thank you. I'm going to focus on one question, right? Because all of us are saying the same things, right? You heard this, something CRA. CRA stands for Community Reinvestment Act. And on Monday, we celebrated something special, right? Juneteenth, that 100 years later, you were given the right to vote, and also fair lending, right? So communities banks like Valley National Bank, better known now as Valley Bank, has to provide these types of mortgages, as some of my colleagues here also have to, right? So what is the philosophy of Valley Bank? Is that we are community-based. We've been around for 100 years. We invest in the community. We are part of Reinvest Newark, helping small business owners, first-time home buyers. We do financial literacy for nonprofits. We are a big sponsor of many nonprofits here in the city of Newark, Urban League of Essex County, La Casa, Ironbound Community Corporation. You name it, we're there. You know, I like to say that we're no longer the 499 refinance bank when Jerry Lipkin was around. We are, in the last 6 to 7 years, focused on minority lending and growing small business owners, first-time home buyers, investing in the community. I have the product. I have a low interest rate, lower than the market rate. I have no mortgage insurance. Credit score is 620, but we say those credit scores and you're gonna say, well, I can't apply if I have that score. No, your situation is unique and I might be able to go lower than 620 if I find the right mortgage product for you. Okay, so if you wanna talk more, you go to my table. I'm also bilingual and that's it, I'm done.
Can you copy your paper, please? There's a reference. Hello again, buenas noches. So a little bit about our bank philosophy. I mentioned we're local in New Jersey, not in Newark as some of the other banks are, but about 30 minutes away. We're an extremely diverse bank. We just amongst our employees alone, we represent about 25 different countries, and various languages. I mentioned earlier, my team is, we're 7 deep. We're all bilingual. For our Spanish-speaking clients, we feel it's very important to provide loan conditions and follow-up documentation or emails and whatnot in Spanish so that the client feels that they're being, whether you speak English or Spanish, that we're holding your hand every step of the way and that you're being educated throughout the process. I believe wholeheartedly that more important than interest rates and the current economy and inflation and all of the things that are impacting all of our families at the moment, it's misinformation, lack of information, talking to the wrong people that are not professionals in the industry, that's going to get in the way of you getting into home ownership. So I'm fascinated that there are so many of us here tonight for you to talk to and so many phenomenal programs. I want to talk a little bit about grants. There are many third parties that offer grants at the city level, county level, national level. NACA, for example, is a phenomenal program that's available all around the country. And for those of you that can qualify for a program like NACA, you look no further, right? But then the majority of the public doesn't qualify for a lot of the grants. And one of the things that's very interesting about what we do at Bond Street Mortgage is, number one, we're not a depository bank. All we do is mortgages, residential and commercial. So whether you're looking for a traditional mortgage like FHA, VA, conventional, or you need a non-traditional mortgage because maybe you're a self-employed borrower that doesn't fit into the box of traditional lending, we have dozens and dozens of programs available to you that we can discuss, and I'd be happy to answer your questions about any of the alternative loan types after today's presentation. We don't offer grants directly, but we do work with a lot of the third parties that do. So when a client comes to me and my team, sometimes we know that there might be a program that's available locally to you that we don't participate with. We will share the information with you so that you can proceed with another program if needed. As far as gifts, of course, are always allowed on transactions where you're purchasing a primary residence. A little bit about the loan programs in general. Because we offer so many different types of programs, I can say that, in terms of credit score, it could be in the low 500s, or for conventional lending, it has to be 620 or higher. With all of our alternative loan programs, you could be below 600, depending on a number of other factors. There is a tremendous gamut of products available to you through our bank, and it really just depends on what your needs are. The most important thing for us, for the client, is that they can manage the monthly payment. The monthly payment is more important than anything else. Sometimes the client qualifies based on credit, income, and assets for a loan in a higher price range, but for us, it's very important to be highly consultative with the client in our conversation to make sure that we set you up for success and that you can afford that monthly payment. Let's see, we talked about gifts and the requirements in general. It's too much information, obviously, for the few minutes that we have. But again, I invite you to visit with me, and 2 members of my team are here today as well. We'll see you after the presentation, and we're here for you to answer any questions you might have in Español and in English.
Good evening, everybody. As I mentioned earlier, my name is Robert Ballin. I'm a community lending officer with Citibank. And I wanted to take a minute to, talk about the home ownership journey and what that looks like. Because many of you that are here today are either thinking of buying a home or maybe never thought of buying a home, but you made the first step today to make it here to seek out information on how to get started. There's never a perfect time or a right time to start thinking about home ownership. The first step that you can take is to source out the information and start with what's called a pre-approval. You may have heard that word thrown around quite a few times tonight. And basically, a pre-approval is so important because not only does it let you know what your affordability is, but it really gives you a really detailed insight of what your potential looks like in terms of home ownership. So a lot of the questions that you have, how much can I afford? How much money am I going to need to purchase? What credit score do I need, et cetera? All of those questions get ironed out through your pre-approval process, which is day one, starting with a conversation with a lender. So I really emphasize and encourage everyone, even if you're not ready for a couple of months or maybe a year out, start that conversation. And that way, if you have anything that you need to work on, you at least have a blueprint or a map, so to speak, on what you should work on to make yourself, home ownership ready. At Citibank, we offer, we're a full service lender. We're a major lender. Some of you here tonight may have a current relationship with Citibank, which we do offer incentives and discounts for your relationship with us. So we offer FHA loans, we offer conventional loans, jumbo loans, you name it. But more importantly, we also do offer CRA-based loans as well. At Citibank, we have a very unique product that's called Home Run. And basically what that is, it's a first-time home buyer specific mortgage. And what it allows you to do is it allows you to put down as little as 3% down on a purchase. So on a modest home at $500,000, all you need is $15,000 to start in terms of a down payment. Now, of course, there are other expenses associated with buying a home. You have your closing costs now that you have to worry about. And in addition to our Home Run program, we also do offer a lender paid assistance as well, which is basically a credit up to $7,500 So that's $7,500 that we can allocate to you to help with your closing cost expenses. And also, at your discretion, let's say if you have extra money, you can also apply that credit towards your interest rate and buy down your rate even lower. Now, the beauty about that is that our home run program is already priced lower than what the standard rate would be for a standard conventional FHA loan. So if you combine our credit and buy down your rate even lower, I'm sure that can get you somewhere comparable to Columbia. But as it was mentioned earlier, that is a phenomenal rate. However, the market today is, it's what it is, right? The rates are high, and we do everything that we can possible to kind of help alleviate that. So with our home run program, the minimum credit score requirement is a 640. So we don't ask for perfect credit, but we do have some credit standards in place for a very good reason. Because again, it's not about just giving money and allowing you to buy a home, but we also want you to keep your home for the foreseeable future. So being financially responsible is important. Understanding the expenses associated with buying a home is important, which is why we have ratios in place. You may have heard someone say the term debt to income ratio. And basically what that is lenders typically look at your expenses. So what we do is, and how we qualify you is, we take a percentage of your income, and we basically add up all of your liabilities. So liabilities will be anything that would show up on your credit report. So credit card payments, car payments, school loans, etc. And when we take that and we divide that by your income, it gives us a percentage. And that percentage is your debt to income ratio. Now, FHA is a great product. It goes as high as 55, 56, 57% in most cases. And what that means is that your mortgage or your affordability, your expenses cannot exceed more than 57% of your monthly gross income. With our home run program, that ratio is 45%. And the other unique feature with that program also is that there are no interest rate adjustments based off your credit score or your down payment. So this program has no PMI, so no private mortgage insurance. And again, what private mortgage insurance is basically anytime you put down less than 20%, lenders typically want to insure the mortgage by having a mortgage premium associated with your payment. Now that expense gets passed on to the buyer, which is you. And with this program, that's no longer the case. So there's no PMI with this program, and it's very costly. I mean, depending on the property, it varies, but it could be anywhere between $200 and up to $500 per month. So in hindsight, there's no PMI, so there's also no expense that we have to factor in when we're pre-qualifying you. So in return, that can also increase your affordability, not hurt you or penalize you, just for the simple fact that you don't have the 20% to put down on a property. I've been doing this almost 15 years. Handful of clients nowadays have 20% to put down on a property. So it's perfectly fine. The minimum down payment is 3% down. And the good thing about our program is that it's not just focused on low to moderate income areas, which is huge. So we do not have any income restrictions. So if the property is in fact located in a low to moderate income census tract, there is no income restrictions whatsoever. So if you earn $200,000, $300,000 a year, you can still leverage our home run program. But you're also not limited to those areas. Now, if you want to, purchase outside of Newark or in other parts of Jersey, our program works for 4 primary counties in New Jersey. And those counties are Essex County, Passaic County, Bergen, and Hudson. Now, if you are outside the census tract area, there are income restrictions, but it's a very realistic and modest $140,000 in annual income. So if the combined qualifying income on an application is $140,000 or less, you're entitled to leverage the program that we have to offer. Aside from that, we're not limited to just those 4 counties as well, because we also do have another first-time home buyer product, which is called Home Ready. Home Ready is an agency product, very similar to Home Run. It also allows 3% down. But the difference there is that there is mortgage insurance, but it is a subsidized, lowered cost mortgage insurance. And in most cases, for some of the loans that I've done, the mortgage insurance usually does not go over $100. So it's a very cost-effective alternative to Home Run if you don't qualify. And the main ideal is that everyone's circumstance is different. So I encourage, I'll be posted outside, at a Citibank table if you have any further questions. But it's a really great opportunity to take advantage of because with this program, it may make what may have not been attainable on the basis that we're offering you a $7,500 lender credit and there's no PMI. And just to add, we also in connection with a lot of the not-for-profit agencies throughout Newark, we have strategic partnership with those agencies where our grant programs can be layered together. So with Carmen's $10,000 grant, we can also combine that with our $7,500 grant, which now is $17,500 that we can allocate towards buying a home. And if there's other grants that are available, we can also layer that and compound that. So there's no limit onto what you can layer. And being a community lending officer, we tend to have a lot of connection with these agencies that we can put you in touch with to ensure that you're maximizing the monies that are available to purchase a home. So in most cases, I just had a closing the other day actually where the attorney had to give me a call to confirm if the closing disclosure was accurate. And the closing disclosure is basically a document that you get that summarizes all of your expenses. And my client out-of-pocket expenses was $1,300 to purchase a home. Just $1,300, which is incredible because on a normal any given day, closing costs can be anywhere between $15,000 to $25,000. So there was a tremendous savings there simply because that client was able to leverage a lot of the programs that were available. And again, as a community lending officer, we're very well connected with these agencies. And, I'm proud at the fact that we can actually layer those together. So it's not money. I mean, there's definitely money out there. The question is, how serious and how ready are you to purchase a home? And it starts with a pre-approval and a conversation.
I think I said most of the stuff before. I went in advance. Sorry. So um, our long term is 5 years. It's income restricted. You have to reside the home for the 5 years. If you move before time, you will have to pay 20% of the loan. It's a forgiven each year. 20% of the loan it will be forgiven. How much? This is no income check, no credit check. I mean, income check, no credit check. So it's all depend your income. It's all depend how many people live in the home or it's gonna be living in the home. Yeah. Our grant can be combined with other grant or other loans. So it's no problem if you have all the grants or the lender is giving you a grant, you can combine them with the one with the city. Huh? Yeah. So the main thing of the program is once you find the home and you get a contract, that's when you're gonna come to us. We do not take application without a contract. Once you get that contract, once you get the home, once you get the lender and get the contract, that's when you can come to us and apply. So we do not take application without contract. So you have to bring all the requirement. Requirement is pay stub, tax return, and how many people, for everybody in the household, whoever is gonna be living in the home, we're gonna need income for all the people living in the home. So it's income restricted, it's home, requirements. So we take the 80% medium and that's it. So when you qualify, once I get the application, I'm gonna review the application, make sure I have all the required document. After we get the application and it's approved, we require to execute a mortgage or an agreement with the city, meaning that that document is gonna be recorded at the county as a secure loan lien. Once you comply with the 5 years term, that lien will be discharged out of the mortgage. So, and then if you have any question, we have I have the application in the back, we have flyers and yeah, the $10,000, once you being approved and all the documents are in, and it's time for you, because a lot of people think the check is gonna be given to you. The check is not gonna be given to you. The check is gonna be made out of the attorney or title company. Once everything is ready, all documents are in, we need credit, loan estimate, we're gonna need appraisal, we're gonna need home insurance. Once we get all those documents and it's time to close, like we call closing, because we do sign an agreement and a mortgage. Once you come in with the attorney, that check is gonna be given to the attorney's name. So it could be sometime that you come to me and it takes a little longer for us to issue the check. You can close before we get the check. Let's say our check it take a little longer and it's time for you to close and you don't want to lose any opportunity with the mortgage, you can go ahead and close. And then we reimburse that money to you. But you had to come in with the attorney and the home buyer had to be in present. Once we close, we go and record the mortgage at the county. Like I said, it's gonna be a lien on the home. And then for the 5 years, once the 5 years are done, it will be discharged.
Well, let's thank our presenters. Great presentation. I believe we have valuable information provided by all of them. One thing that is important, I believe, is that sometimes people want to save some money on the closing and they don't hire an attorney. And I believe that the closing could be done by an insurance company, let's say a title insurance company, but you need an attorney review of the contract. You need the attorney to guide you through the process. The real estate contract is usually 6 or 7 pages. You do not understand most of what the contract says, and it's good to have someone that is going to guide you through the process. Once you get the attorney review and everything is done, and you have the inspection done, and the attorney reviews the inspection and all that, then you may decide, or the attorney may decide, to use a title company to do the closing. They usually charge much less than the attorney charges, and some of the money you can save and use it for other stuff, and let's say in the process. But it's important, I believe, it's imperative that you have someone that is a professional reviewing the contract, because otherwise you might fall into something like Aníbal did. He didn't check, let's say, the inspection report, and he had to do something very expensive after he purchased the house. So I believe 2 things that you should do. One is required is the inspection for termites. Let's say an inspector goes and checks the termites to make sure that there's no termite infection. Other things that people do is inspect for what is it called? It's a chemical that is cancer. Well, radon is one. In the city of Newark, usually there is no radon, but if you are in farm country, there is usually radon because the animal poop creates the radon. So I purchased a house, one of the houses when I first moved to New Jersey in Baskin Ridge, and it had radon. So they had to install a fan that ran continuously for 24 hours to clean the radon from the basement. The other thing is hydro, whatever, chloride or something like that, or formaldehyde or something like that. That's a cancer-inducing chemical, and some people, if they have, let's say, old houses may have that. The other thing that you should check is for asbestos. Let's say if the inspector goes to the basement and see that pipes are covered with a white thing, it's a sign that there might be asbestos. If there is asbestos, those asbestos may cause cancer. So you have to make sure that you had an inspection of the house before you decide to close on that house, because otherwise you would be responsible for any repairs. And if you discover it before you close on the house, the owner of the house, the seller, will have to pay for those and not you. Thank you very much for being here today. I believe